What is up everybody, Gifford here and welcome back to another stock market video. So today I'm going to be talking about TTCF Stock, Tattooed Chef, and how I've started buying into them and dollar cost averaging across them. In this video we're going to go over the Q1 2021 earnings. We're also going to go into my portfolio just to show you how much shares I own in them and where I've been buying them. And then at the end we're just going to have a look at a few analyst ratings for them. So they're not covered very much because it's still a small company, but we'll go over that and some of their price predictions. As always, hit like and subscribe if you're interested, otherwise let's just get on with the video. So just to start things off, it's currently pre-market Monday and the price is $20.24, so it's a little bit down, and we can see that the current market price is $1.65 billion. And here on Yahoo Finance we can see that they actually missed their EPS earnings, consensus earnings, so the estimation was 0.01, but they missed it because they got an actual of minus 0.1. So moving over to the chart, we can see that the earnings was released around about May 12th, and then usually when you miss it, it goes down, but in this case here, Tattooed Chef actually ran up a decent amount by about $4 from $16, $17 up to $20 where it is now, because there was some hidden gems in the report which we're going to go over right now. And if you don't know how to find earnings, it's as easy as going into Google, typing in TTCF Q1 2020 earnings, and it has a brief summary here, but what you can do is go down, I've already gone to it here, go to the Tattooed Chef Investors Relations page, basically click on that. It then takes you to here and you go to 2021 and the investor quarterly results, and then it'll be one of these reports right here, and I think it's this one here. So let's just go over now and read some of these highlights and just show you why the stock actually went up and why I've really started to like the stock a lot, and the reason why I moved a decent amount of my money from Palantir. I actually sold Palantir, 70% of it in the end, and I've been slowly dollar cost averaging into Tattooed Chef because I like the growth potential. I found that Palantir was overvalued just because of their own revenues when they released their Q1. I did a video on that stating why I sold it, but I didn't like the growth on it, and I reckon this company here has more growth even though they're a lower market cap. So let's just go and have a look at these financials right now. So just reading financial highlights for the first quarter of 2021 compared to their first quarter last year of 2020. The revenue was at 52.7 million, which is a 59% increase over 33.2 million from last year, and that's huge right there. That tells me there's a lot of demand for the product, and this is really why it drew me to it. So getting out my calculator, if we just type in 52.7 times that by 4 quarters as an estimation, we can see here that the revenue is going to be at least 210 million for the year. And then just going over to that calculator again, if I type in the market cap, which is $1.65 billion, divide that by 210 million, we can see here that it's roughly about 7.8 years of, if I'm buying the stock price right now at $20, that their revenue is going to take 7 years worth of that revenue to hit their market cap right now. And why that's important is because obviously as the years go on, they're actually going to be increasing their revenue. So buying it now, potentially knowing that their revenue is going to go up double, you know, they may go from 200 to 300 to 400 million dollars. Buying it at $20 now is going to be really cheap compared to this, and we'll see this value of years really start to go down as they start increasing and ramping up their production and selling these products. But getting back to the financials. So the gross profit was 13.7 million or 26% gross margin compared to 9.2 million last year. So they've increased it again, which is really good signs that the product is selling, or 28% gross margin, which really shows that their products are really starting to sell across their sales channels. So the net loss was 7.9 million compared to the net income of 5.9 million to the prior year. So this isn't too good because they're losing money, but again, they are a growth company, so you expect some losses in there. I'm not too worried about that because they do have a large cash position. I think it's about 180 million. Not really a big problem for me. So the next part is I just took more in depth about the financials that they have there in the summary. We're not going to go over that because I think that's enough just to show you the growth and that's been happening. So in this 5-page document down here, it's also got an outlook for the full 2021, so we're just going to read to see what the company expects. So the expected revenue is in the range of 235 million million to 242 million, which is what we kind of guessed, a little bit over that, which is going to be an increase of 58% to 63% compared to last year. So growing at over 50%, which is huge. So it's very important to know that from a manufacturing background, when companies kind of state these figures that they're growing by 50% a year, that it just doesn't actually happen. You need the manufacturing and the infrastructure and the correct products to be able to sell to get these numbers. You can't just all of a sudden grow when you want to be. It takes the whole chain to actually get that, and this is why I was happy to sell at a loss out of Palantir to be able to buy into this company, because what I'm seeing here is just very quick growth that's happening, and these financials just absolutely show it. So okay, let's just get on reading again. So the guidance implies 49% year-over-year growth to the base business to 222 million, and a 13 million to 20 million contribution from one of the two facilities included in the Foods of Mexico acquisition. So they just bought Foods of Mexico to help them out there, which is pretty good. They've acquired another company. That's how big this company is getting. The revenue guidance includes any revenue contributed from the second facility, Carsten, because it is currently not in operation. So that's good. They've got another I didn't actually realize that they bought another company, but it's not operational at the moment, so that's good to have. So more headway in the future to be able to manufacture more products as this company grows. The company expects to update guidance again once production begins at the facility in the coming months. So gross margin in the range of 20 to 25%, that's pretty good. Adjusted EBITDA in the range of 2 million to 4 million, don't really have much to say about that. And capital expenditure in the range of 15 million to 20 million. So that's okay because they've got a big cash position. Spend some money to make some money. So they're just stating here that the company is in a high growth phase and does not provide guidance for the most directly comparable GAAP measures. So that's fine because they are a growing company. They're going to be spending some money, but really what we're showing here is that they are growing at a great rate. And if they can pull this off for 2021, we're really going to see that in the share price. And if there's any dips in the share price, especially when it gets down to $17, $16, $15 or $14, I'm definitely going to be having some decent buy orders at that price point. So the rest of the document is just the rest of their financials, but we're not going to go over them. The summary was fine for me. So moving on to my Hatch account is where I own all my Tattooed Chef shares. We can see the current value, we'll just leave it in US dollars. The current value is $5,110. It's had a good return of just under $700, which is 15.7%, which is good. This is probably around about the amount of money that I've lost in Palantir, so I've gained that back. And we can see here that I started buying them in April the 26th. And my average cost is $17.67. That I've got 250 TTCF shares, a majority of my portfolio. This is actually my second largest position behind Tesla, so it's 26.58% of my portfolio. And if we just go down here, we can see some buy orders that I did recently. In May, so leading up to the earnings, I took advantage of that when it was low. Who knows if it's going to come back down again, but at this price point, probably not going to buy. I'm just going to wait because there's still a lot of time for them to execute in the end of the year, and I'm pretty sure there's going to be some definite dips back for the stock after the hype is gone. So we can see here, well, 33 shares at $16.09. 17 shares at $16.99. I bought a large amount here of 43 shares at $16.87. So just typing into Google here, I can see that the consensus is a buy and that there's only actually 2 analysts covering it, and their price target is at $23.50. So I'm guessing this is their 1 year price target. So over at MarketBeat, we can see that there's 2 Wall Street analysts have issued ratings and price targets for Tattooed Chef in the last 12 months. Their average price target, 12-month price target is $23.50, predicting that the stock has an upside of 14.9%, so 15%. It's got a high price target of $26 and a low price target of $21, so shows pretty good, although yeah, 2 analysts is not really conclusive. So going over to the Wall Street Journal, I don't know if I trust this website, but again, stock price targets for TTCF, they've got a high of $27, a median of $23, and a low of $19. So again, around about the average of $23, which is fairly below what it is now, but I wouldn't be even buying at $20 currently. I think there's going to be a few more dips to come yet for the stock. So for analyst ratings, one of the websites I do actually go to a bit is bazinga.com, but again, there's not too many covering it. So if we can see here, there's some fairly old analyst ratings for TTCF. So on the 17th of November 2020 last year, we can see that Roth Capital, George Kelly, initiates coverage on this, and he says there's a buy, and what's the price on here? So his target is $26. And also before that, the 3rd of the 12th, December, I assume it's December 2020, is Jeffries. It doesn't have a name on here, and they've got a price target of $17. So that's fairly old. So I've gone over to tip ranks now to have a look at this, who this George Kelly is from Roth Capital. We can see his success rate is 66%, and his average return is 28.7%. I think last year I doubled my one, so I bet this guy here. But so anyway, probably last year I had beginner's luck because we had that massive dip, so I just got lucky. But it's always good to beat some of these analysts. Not sure what's going to happen this year because I'm currently down, I think, in the performance for the year minus 11%, so not doing too well. So here's a list of stocks that he covers, and we can see TTCF, Tattooed Chef. So if we click on that one, it gives us a graph here, and it also has a date. So this was 6 months ago, and we can see that he initiated the coverage. He said it was a buy at $17.01, if you can see that here. And we can see it actually went up in December, the end of last year, so that was pretty good, all the way up to, I think its highs at about $25, $26. It may have gone, went up to $28 in September 2020, but we can see that it declined as it went down here at the beginning of the year, and that's when a lot of growth stocks got hammered, all the way down. I'm pretty sure it went down to $15.50 or something like that, $15.60. So this gave us a really good opportunity if you like TTCF like I did. Yeah, and we can see now it's riding up. Who knows what it's going to do in the short term, but if it ever gets around here, I'm definitely going to be buying. So that's where I'm at with Tattooed Chef as I slowly start to accumulate the shares and build out my full position. I just want to build up that cash position just in case there's going to be any dips so I could take advantage of it. So it's been a long time since I've actually got anywhere actually over 10% in cash, and this is nearing 20%, so that's a good amount of money to have on the sideline. Anyway, that's enough for me today. I'll be doing more videos later on Tattooed Chef as I cover it. It is a new stock of mine, so I will be talking a little bit about it. Thank you for watching. As always, make sure you do your own due diligence in the stocks that you buy. Just remember, I'm just only a newbie trying to make money from the stock market and just showing you guys what I'm doing. Don't follow me. Don't lose money because I'd hate for you to lose money on my random stock picks. So yeah, may the gains be with you. Also, feel free to follow me on Instagram and leave a comment down there what you think about Tattooed Chef if you're invested in it. What do you think about its growth? As always, I'll see you again in the next video. Goodbye.